Hello, everybody. Welcome. Stock markets are down about 3, 4, 5%, depending on the index you're looking at. Dow Jones down 3%, Nasdaq down 4.6%, S&P 500 down 4%, Russell 2000 is down 4.3%. Please let me know how the audio quality is on X or YouTube. Everything should be all right. Okay. All sectors are down today. The S&P 500 index came close to the 7% limit down, where the circuit breaker, where they come close to, they close down the index for about 15 minutes for the first limit down. And, but I think it bounced just before that. So I don't think we got a circuit breaker triggered today, but it might happen. It may happen today or tomorrow or next week, who knows. The yield curve has much steepened. The 30-year Treasury yield is up 3 basis points. The 5-year Treasury yield is down 11 basis points. And the 2-year Treasury yield is down 12 basis points today. The expectations for a Fed cut in May is pretty much stable at about 30%. I don't think the markets are expecting, in general, a rate cut in May. Like I said, all stocks are down except for United Health. In the last week, since just before Trump announced his table, in the last week, Apple is down 7.5%, Tesla is down 8.5%. Other Mac 7 is actually up, so that's interesting. Meta, Google, Nvidia is up 5%. Broadcom is up 11%. Even Palantir, CrowdStrike are up in the last week. Microsoft is flat. So it's really mostly about kind of general feeling for risk taking, as well as the China tariffs. I think the markets are ignoring at this time. They haven't really priced in the 10% jump on all imports, 10% jump in tariffs on all imports. I'm going to pin. I wonder if I can do this. Let me see for a second. Okay. I pinned at the top of the screens a screenshot that macro analyst posted. This shows the tariff rates increases after yesterday's adjustment. China, 145% tariff increase on all Chinese imports, 25% on steel, aluminum, autos, and non-USMCA goods from Canada and Mexico, as well as 10% on nearly all other imports. So these are very significant increases in tariff rates, even after the reduction of tariff rates from yesterday. The reciprocal tariffs were eliminated on all countries except for China. Even after that, the average tariff rate on imports into the US has went up by 7 to 8 times, from a few months ago. So this obviously has very significant material implications on inflation rate going forward, as well as the potential growth rate for the economy and the global economy as well. And I think this is why we're seeing the longer run interest rates increase, or part of the reason, as well as the stock market is still very skittish. We gave it back about half of the increase from yesterday, and this tariff policy, I think, is going to pressure returns for some time to come. Any questions, comments, please request to speak. I'm going to read our usual headlines, Reuters article, and we can keep it short today. We had a 2-hour space yesterday. If there are no questions, comments, insights shared, we're going to keep it short today. US-China trade war reality sets in as tariffs keep ballooning. U.S. Steel and Nippon Steel working with Trump administration. There might be some exemptions for some companies. I wonder if Apple and or Tesla will be part of those exemptions. Earlier, we had a favorable inflation report where the inflation numbers came in lower than expected. They were driven primarily by lower flight and hotel. So lower travel demand drove inflation rates downward, both headline and core. Flights airfares are also benefited from lower oil costs as well. So we'll see if that continues. But I think a lot of market forecasters, inflation forecasters, are kind of discounting the March readings because they're saying inflation or the tariffs wouldn't have worked into inflation as CPI at this time. Tomorrow we have the PPI numbers coming out. That may be a little bit of a different story because I think some manufacturers have seen increased costs because of trying to pull forward some of the imports before the tariffs kick in. So tomorrow's PPI number may tell a little bit of a different story. But I think overall story here on inflation is CPI will likely continue upward for months to come. And margins, corporate margins, I think will be pressured because of these tariffs. Because I think corporations will try to pass on the costs, but I think the consumers are all tapped out. So consumers may have a bit of a difficult time trying to pay the prices that corporations want. So we'll see how corporate margins continue in the coming quarters. We also had a CarMax. So CarMax is the biggest used car retailer in the country, and they just announced earnings this morning, and their ticker is KMX or CarMax. They're down about 20%. They opened down 15%. They continued lower. They're down about 20%. And this is a pretty reasonably priced company, 22 PE ratio, market cap of about $10 billion. But let's read some headlines from CarMax's because this has implications for both Tesla, some of the companies that are popular like Carvana, and also inflation expectations, implications, etc. So let's kind of take a quick look at CarMax here. We're going to read some headlines from CarMax. Give me 1 second. This is a Reuters article on CarMax. Used car retailer CarMax misses fourth quarter profit expectations. Let me see real quick if there's any questions on YouTube. Take a moment on YouTube to hit the like button. It really helps grow the channel. Thank you, everybody. Used car retailer CarMax on Thursday reported a fourth quarter profit that missed Wall Street estimates as higher borrowing costs kept some consumers from making big ticket purchases. Shares of Richmond, Virginia-based company fell 7.5% pre-market trading, and like I said, after the open, it was down 15%. Now it's about 20% down. Used car retailers sales have been under pressure from a post-pandemic trend of consumers gravitating towards new vehicles with improved features and better financing options. However, US President Trump's tariffs on auto imports have raised concerns about the affordability of new vehicles, which industry experts said may sway cash-conscious buyers toward used cars in the $15,000 to $20,000 price range. I'm going to read that again real quick because this has implications for a lot of different things that we track here. US President Donald Trump's tariffs on auto imports have raised concerns about the affordability of new vehicles, which industry experts say may sway cash-conscious buyers toward used cars in the $15,000 to $20,000 price range. CarMax reported an adjusted profit of 64 cents per share for the fourth quarter ended February 28th. So this doesn't include March or April. Okay, so compared with the average analyst expectation of 65 cents per share, according to data compiled by LSEG. Its quarterly revenue increased 6.7% to $6 billion, marginally higher than expectations of $5.96 billion. So a little bit of a revenue beat, um, slight miss on earnings. I thought they did something with their forecast. Let me see if I can find another article here that's a bit more comprehensive. Um, Let me just see for a second here. CarMax pulled its long-term sales forecast, citing macro-level uncertainty. CarMax pulled its long-term sales forecast, citing macro-level uncertainty. And this is really the kind of thing I think we're going to continue to see throughout the coming weeks from many different companies, many different industries, because there's just no visibility into the coming quarters with this insane tweet by tweet massive changes across markets, across policies that really hurt company managements. So this is a trend that we should kind of keep an eye on. It's very important. All right, so we covered the markets, we covered the inflation report, we covered CarMax. Any other questions, comments, please request to speak. I posted at the top of our screens a tweet, a prediction that I don't believe Tesla Automotive will be profitable again for years to come. I think Tesla Automotive will be unprofitable for years to come on a GAAP basis and adjusted for reasonable CEO compensation. I think Tesla is in a really difficult position here. Competition has just proven to be a very, very difficult thing to overcome, especially when your CEO is simply unfocused. He's focused on other things such as politics, which alienates tens of millions of people in the US alone, hundreds of millions of people worldwide, consumer products, services, the lack of progress on FSD, the declining margins, likely to decline margins for Tesla Energy, the rising competition for automotive and energy. I think Tesla Automotive is in a very difficult position here. EVs have failed to cross the chasm. They kind of become a bit of a niche thing for now. Hybrids are filling that gap. I think people are choosing hybrids. So at the top of our screens is a prediction that I don't believe Tesla Automotive will be profitable again for years on a GAAP basis, which means to the extent that Tesla is unable to develop FSD and build robotaxis, some sort of economic value above and beyond what Waymo does, I think we're going to have a bit of a problem for Tesla. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.